It does seem like, growth is gaining momentum, but it is pretty uneven. What's your greatest concerns?
You're absolutely right. The reason why we think that it's not out of the woods yet is because that while we see the second quarter was a significant step up from the first quarter, yes, in sequential terms, we're talking about annualized Q-on-Q growth being as high as close to 56 to 57%. However, the problem is this is still uneven. As the reopening continues, we're seeing that on the manufacturing side, clearly industrial activities, construction have clearly gone up very quickly, and we can see that the rebound has been coming fast and furious. But at the same time, however, as you were already indicating, retail sales were not doing that well. And in particular, it shows that within consumption, especially the consumption of discretionary services, is probably still lagging behind. Within retail sales, there is only a small component on that, which is dining out. But if we look at the broader definition of consumption, it should also include, for example, high value-added services such as education, overseas travel, etc. So for this component of consumption, I'm afraid that it is still lagging behind. So between the two parts, let's say consumption versus investment, we think investment has done a better job, but consumption is still dragging their feet. Especially the remaining part in services is probably very slow in recovery because people still hold the fear against the kind of going out and traveling. At the same time, from a by industry perspective, services in general have been lagging. And I'm afraid that those services that involve face-to-face, physical contacts are probably going to remain dormant for a while. That said, I have to say that the second quarter data definitely show the upside to GDP growth. And therefore, I would say that we probably will see China's GDP growth, coming back quite soon. For the annual terms, there is definitely upside risk to our number of 1.2%. But it is probably too early to say that third quarter and fourth quarter will be, a much higher number than this.
Helen, just a headline out of Xinhua News Agency reporting that Xi Jinping says fundamentals of China's growth won't change. And this is on the back of Xi responding on Wednesday in reply to a letter to global CEOs. He says fundamentals pretty much intact, but if consumption is a long way off from the peak that we saw, surely fundamentals are not really that strong.
Right. I'm afraid that is the case. The problem is if we only see the industrial side of the recovery without necessarily the consumer's demand, holding up, I think that potentially would build into higher inventory and potentially that could drag on later growth. And at the same time, I think there is also other worries outside of China. In particular, if we look at the reopening, in the rest of the world, I would say that so far it's bumpy and uneven, especially in, in countries where we're seeing the second wave or first wave still continuing. It is hard to see that how China can remain completely, on its firm footing at a time when the rest of the world is still coping with a very deep, recession out there. So I think that there are additional factors over here in combination that will probably keep our, monitor on China very closely focused on, for example, services within consumption. And we think that this will be crucial to see that whether China will be able to hold on to its stable growth path. And such a trajectory in the last 20, 30 years has been so robust that we think that this year is probably still going to be a quite challenging year.
Helen, I'm looking at the jobless rate in China. That seems to tick lower, I should say, about 5.7% now. It's been pretty resilient, the headline numbers we've seen when it comes to jobs. Is that an indication of what we're seeing on the ground, or do you think, in a way, this is actually a positive signal that perhaps consumption, the demand side, can actually catch up with the supply side soon?
In fact, I think that at the moment, the consumption weakness is probably not so much caused by the concerns of job security or income growth, but probably primarily due to people's concerns about going out and, keeping social distancing rules, etc. And therefore, we think that we're probably still in that honeymoon period during this pandemic, that we're not seeing a dramatic correction because of the job market deterioration, especially in China. Elsewhere, you probably have seen, much deeper correction because of such concerns being higher. But within China, I would say that the very fact that unemployment rate is still, relatively low and well below the annual MPC policy target level at 6% is definitely a good news in the sense that it will ensure the households have the spending power going forward to continue to spend and probably push consumption to a higher level. But the one thing I want to highlight is the fact that June is actually a very critical time, as well as July. This is a time when college graduates are coming into the labor market, and we have more than 8 million of them. And this year is such a tough year that given that a lot of, the small and medium-sized private companies have already, frozen their headcount, it is really hard to absorb all these graduates right away. So I think that the very fact that this number has been stable so far, and hopefully still close to stable, maybe the underlying situation, it's very encouraging. But of course, there is anecdotal data saying that actually the underlying situation could be weaker than that. I think that's something we need to watch very closely.
You mentioned that this uneven recovery. Why do you think the PBOC is then at least sending some type of message that they're talking about potentially exiting stimulus? Is that still premature?
We think, yes, this is probably too early to say that, but the policy complacency, is already arising from a couple of things. Number one, they're looking at the gross recovery. They look at the numbers. They feel already very much assured that the Chinese economy has already rebounded from the very bottom. So, the very bottoming out process happening so quickly, so effectively, I think really gives them a lot of, confidence that they don't have to keep the stimulus in place for much longer. And second, I think they're also probably concerned about the potential consequences of putting in too much easing measures, so that afterwards you probably will see the buildup of a higher leverage ratio. So given what they did back in 2015 and 2016, and there was a very high level of leverage increase, especially seen from the household sector and the corporate sector. I think that is a particular concern for PBOC, and therefore they don't want to keep the easing measures in place for too long. But that said, I think the problem is that we do not think that the second half is completely, roadblock free for the Chinese economy. I think the very trouble that we're seeing, as we were just saying, is that externally we still see, the potential headwinds strengthening from the uneven and bumpy reopening elsewhere, and we're probably not necessarily going to see such a strong boost to our export numbers, especially from the electronics sector and possibly the medical supply. If that is the case, then the most of the burden would be on domestic demand to grow, for the headline GDP growth. And for domestic demand, as we were saying, consumption is not completely on its firm footing yet. So I think this is a bit premature to think about completely exiting. And it's hopefully that we can keep this relatively supportive policy environment for a little bit longer. But we do want to highlight the fact that bond yield have already risen so much, and lending costs, borrowing costs in general will be slowly rising as well. So this is definitely a concern. We need to keep in mind that, policymakers in China hopefully would keep the overall accommodative policy stance for a bit longer, so that people would be happy to spend and the corporates would be happy to invest.